This is the weekly review for the week of June 27th to July 1st. So for EU this week, um, I said that I was coming in with a bullish bias because I wanted to see this trend line taken and then price move up into OTE of the daily price swing as well as this daily fair value gap. Alternatively, I said that price could come up here first and then fall off for a bearish week. Um, so we did end up having a bearish week, but price never came up into this OTE. And that's initially what got me confused for the week. So on Monday's trading, um, I had a nice gain here because I was bullish, so I was expecting price to trade down from the weekly open. So I was looking for shorts, and we had this SMT with previous week's high on GU and previous week's low on DXY. So we had a nice displacement break in market structure here, and the raid was of Thursday high as well as Friday high. Had this displacement down, and then price kind of came back up here. This is still outside of the trading session, so this is New York session here. We break down and we form this fair value gap. I didn't want to initially take a short here. I just wanted to see the reaction off of it, and we traded up into it, broke market structure here, and we also violated this M5 order block in discount of the range, and I just identified the range as this low to this high up here. So once we violated that, I looked for an institutional order flow entry drill, which we got right here, and I rode that down to London low. Now the thing is that I expected this to trade lower. I did not expect this reversal at all. And another thing that I noted is how price spent very little time below the 12 a.m. price, right? So this is, like, looking back, is a little bit confusing because we traded up from the open and we made the initial high of the day at London. So that's also what made me think that this is going to be a bearish day and why I wanted a short. And I just obviously took took full take profit at the low hanging fruit because I'm not good enough to predict this. And obviously, if I held this, I would have been stopped out again. So yeah, we ended up reversing and forming a opposite setup, a bullish mentorship setup here. Um, I was not interested in this because this was against the bias that I had, and also price didn't trade into discount here. We just went like less than a pip from discount. Um, so yeah, and then we traded up and took previous week's high. Now this, we had a SMT here, and this is what I didn't see live. I was just looking at previous week's high. So this one here, June 22nd, Wednesday's high, right? We had a SMT here with GU DXY, but then once EU traded up here and took previous week's high, we no longer had a SMT. But we did have a SMT with this June 16th high, and I missed this completely until Wednesday, and that's what fucked up my bias and why I tried longing on Wednesday. So the structure of the week, right? We trade up. We have a high time frame SMT here, and we're taking external liquidity. On Tuesday, we have this huge break in market structure here with displacement. And that's why I use the light bulb like ICT uses. So now I understand for here, once we have this SMT and this break in market structure, immediately we're bearish, or I should have been bearish, right? But because I didn't see this SMT, that's why I didn't see this as bearish live when I was looking at this during the week. So Tuesday does not offer anything because price doesn't break market structure until this M15 low is taken out, and that's initially or after the displacement here at 8 o'clock. So I can't, for the life of me, comprehend how you could possibly take a short here without the break in market structure confirmation of this low. Because if I'm seeing this, like, how do I know this isn't an OTE retracement, right? If we go on the M15, right? Like, yes, high time frame is bearish, but how if we didn't have this break in market structure yet, how do we know this isn't an OTE to take price into this bearish OTE and daily fair value gap like I was initially looking for? Right? That's why this thing is such a mind fuck. So I can't see how you could take a short in here. So you'd wait until H1 BMS here, M15 BMS. But price doesn't give any retracement opportunities on Tuesday. And in fact, we don't trade up into this fair value gap at all. So Tuesday goes by. Now Wednesday is where I fucked this up because I took a long on Wednesday because I still had that bullish bias because I wanted price to go up into that daily OTE. And I missed that SMT with the June 16th high for GU and June 16th low for DXY. So longs still made sense on Wednesday, but only in London session. Because we broke market structure down here, right? And remember now, okay, we're bearish here, makes sense. This huge displacement breaking market structure, we're bearish. So we're expecting price to retrace into fair value gap, bearish fair value gaps. And right here is the bearish fair value gap. So if price is down here, it would logically, within the bias, it would make sense. You could long counter trend up into the fair value gap. Okay, so that makes sense here why these longs worked, right? Previous day low raid with a SMT with GU, have the break in market structure here, come down into a discount slightly inside this fair value gap, inside this breaker, and then we have an order block here too, and can take the low-hanging fruit liquidity here. So that makes sense. Then we continue trading up a little bit higher, but the bodies of the candles, as ICT says, they respect the fair value gap. They don't close above it. So he says that's the most important thing. So, okay, that makes sense for bearishness. Now, since I was looking for buys, and this was a total mess this day for me, because this wasn't as clear as Monday short. Monday short, it was just, I knew exactly where to place my limit. But here, I was debating whether I should place my limit like at the breaker here, in this OTE, and there's also a big figure level, the 105 big figure, and that's where I ended up placing my limit entry. So I was just all over the place, and I noted in my journal for this day that I felt like I was trying to like bend my bias to the market. Like I wanted the market to do what I felt that it should do, not what it was actually going to do. And because we were bearish, right, breaking market structure, we didn't come up into this fair value gap, but we came up into this one and we had a raid here. And this was the entry right here, right? So just get rid of that. Get rid of that because that's wrong. So here is a H1 raid with SMT. Yeah, we form equal highs, but again, the bias is bearish. This is inside H1 fair value gap. Retracement, break in market structure, and return to the fair value gap and the breaker in premium. And this would have been a beautiful trade, right? Just a 3R trade already to this low-hanging fruit liquidity. These equal lows. Another low here, close to 5R, and then for a partial, and then another partial here at London low for almost 6R trade. So this would have been a crazy trade. But this makes sense, right? If I had seen that SMT and all of this live that I'm seeing now in hindsight, this trade would have been perfect for me. Because it had all the elements of the mentorship setup. But I saw this again live, but I didn't take it because I was looking for longs. So yeah, I got stopped out on the long here. Then I tried to enter in on this fair value gap because I said, okay, this is definitely not bullish now, and they're probably going to go for Thursday low. And we end up taking that with no entry. So my short got swerved. And then I just got off the charts. And we had one more institutional order flow entry drill here at this M15 fair value gap to take out previous week's low. So in hindsight, this makes a lot of sense. And the trades on Wednesday would have been beautiful if I had been in line with the bias and had been able to identify that live. Like, you would have really been able to fucking eat on this day with a potential fucking 6R trade. And then even here, this institutional order flow entry drill still within New York session here at 10 a.m. So Wednesday was a really, really nice day, even though I wasn't able to get any of it. Now Thursday, so Wednesday live is the day that I went back onto the daily chart and I realized that we had this SMT that I missed. So going into Thursday, I was bearish. I said, okay, fine, we should be looking for shorts. And I said that this low here, Thursday low, from 2 weeks ago should be the drawn liquidity for the day. Now, London session had bearish structure, right? We had the Judas swing with a SMT on GU with previous New York's high here. So the 11 a.m. high on previous New York session. If I mark that out. No, I didn't, but this one here. That 11 a.m. high in there. So we had that Judas swing, break in market structure, and then return to this fair value gap. This obviously, if I was in here, would have scared the shit out of me, but I'm not up for London session. So after we continued breaking market structure lower, I said, okay, Thursday low should be the drawn liquidity. And on demo, I got into these two shorts here, institutional order flow entry drills. But price obviously ended up reversing, and we had a market maker buy model on this day. Now, one of the things that I didn't do on Thursday is even though I got knocked out on both of these, right, because I didn't roll my stops. And according to the model, I should have rolled my stops. But when I was just trading this live, I wasn't paying attention because I was studying and I was just letting the trade go. But this one should have definitely, for this institutional order flow entry drill on the M15 for value gap, the stops should have been rolled to break even because price moved more than 75% of the targeted range. And ICT says in the in his last mentorship video, we're gonna roll stops to break even when that happens. And then for this one, these stops should have been rolled minimum to 25% of the stop loss range. So you would have still taken a loss here because DXY had that SMT with Thursday's low, or Thursday's high rather. So we rated it here, and we formed a setup on DXY. That's the SMT, and then that's the break in market structure with displacement down. So around like 8:30ish is when you can say, okay, this is probably a reversal for DXY, and that's here when you would have been stopped out anyway. And we had that SMT break in market structure, and then this was a market maker buy model where you had this M15 for value gap to get in on, and it traded up all the way to the equal highs up here. So even though this move caught me off guard, this is just, I think as ICT describes, like one of those days where even though the high time frame is bearish, like price isn't going to be bearish every single day. And this is a day where we ended up having a bullish day, and you would have just probably taken a loss on this day. It's just a standard loss that you would take, because now then again on Friday we resumed with the bearishness. And Friday, I was very much in sync with the bias in the market, but price swerved all of my entries, right? So we left these equal lows down here on Thursday, these two, and traded up into a H4 fair value gap. And now we had a SMT with London high. So I set limits at the PD array, the fair value gap, the breaker here, confluence order block as well, in premium of the range here or the displacement range from this high to this low. But price, although it did come up slightly into premium, you can see there, it never made its way to the PD arrays in premium. So the only PD array to short was this M5 fair value gap in discount. And ICT says we shouldn't short in discount, or when we're bearish. Short in premium. That's what you want to do. You don't want to short in discount. So that's why I didn't set limits here. And also we didn't even respect this fair value gap. We had these body closures above it. So this wasn't very clean in terms of the price action. But the structure of the day was really nice. And I feel like this is like the type of day that I really like, where you could get in on the raid, or if I could have gotten in on the raid here, you take profit at the low-hanging fruit, and then we had institutional order flow entry drills to take out London low. Now, obviously, this day, both institutional order flow entry drills got swerved, so I was looking to get in on this one because we had a break in market structure of the low-hanging fruit. So I set limits here, and we swerved that again. And the only entry was this small fair value gap here, probably extend it to both of them. And this was the high impact news for today. Even if I would have traded this definitely didn't come into the 25% level. Of this one it did, but I probably would have marked out both of these and drawn out the entry like that, and we would have never hit that. So yeah, that took price to the equal lows, the previous day low, as well as the two equal lows from the Thursday 2 weeks ago. And then this was also a nice logical trade here because we form the low of the week here on Friday. So just based on the power 3 of the daily range and power 3 of the weekly range, we should expect a retracement, and we have a displacement up. There was no SMT here, but just based on, again, the weekly power 3 and daily power 3, it very much makes sense to get in on here on this fair value gap, and we went right up to the mean threshold of the daily range. So this was really nice. So yeah, looking at next week, I think that this Wednesday low, this is I think a daily low as well. Yeah, daily low, as well as actually, oh no, this is previous month's low too. So we have two previous month lows here. So this is external liquidity. So I would expect price to probably trade down here at the beginning of the week, since we're already in this fair value gap. We could maybe even take out this buy side liquidity, but what I think is going to happen is we're going to trade down initially at the beginning of the week and then have a bullish displacement reaction after taking this external liquidity, because again, this is equal lows on a weekly chart. So this is definitely significant liquidity. And then after taking them, we could retrace somewhere into premium of the range that ends up forming here. So we have a swing high here, and there's probably going to be a swing low. At least that's what I'm anticipating. Price could definitely just end up trading below here and closing below here, and then we wouldn't be bullish. But I'm anticipating that we're going to take this external liquidity, have a bullish reaction, break market structure, and then trade into at least premium of the range that forms. So somewhere here, just wherever the swing low here forms. And the same thing with DXY. DXY has the same monthly high up here from June. And we have this fair value gap here in discount. Now, even if we, like, I'm anticipating a new high to form here, so both of these fair value gaps are still going to be in discount regardless. So if we have a raid of this external liquidity, you know, the swing high forms somewhere up here. I should probably put that for better representation. Whatever swing high forms up here, we take external liquidity, we break market structure to the downside, and then come inside the dealing range that forms here to come to this fair value gap in discount, or potentially this fair value gap in discount. So yeah, just going to basically see what happens at the start of the week. I mean, Sunday could just end up trading all the way lower down here immediately. But yeah, and then for the news, we only have really the big news is the non-farm payroll. We do also have FOMC meeting minutes, but for some reason I think that this is not the same FOMC as the previous one where they did the rate hike. For some reason I feel like the meeting minutes does not move even though it's high impact news. But that's still Wednesday, and Friday's the big news factors. The ADP, non-farm employment change, I never see that move. So really it's just Wednesday and Friday. So yeah.